You're listening to the Moneyweb Now podcast series with Simon Brown. Live streamed every weekday at 6:30 a.m.
It's Monday, 3rd of August. We've got local July vehicle sales data due 2:15 this afternoon. I'm Simon Brown, coming at you live and loud from Moneyweb Global Headquarters in Johannesburg, South Africa. On the show today, Petri Redelinghuys, Herenya Capital Advisors, AngloGold Ashanti results. Market didn't like them, but expectations must be high because they're printing cash. My question to Petri is, gold miners still withholding, or maybe he's looking elsewhere? Thethe Mokele from Pinsent Masons, key shifts in local construction industry. It's not nearly as significant in terms of GDP as it used to be. And then we'll chat with Consult by Momentum, preparing your children to inherit your wealth. This podcast is brought to you by Stanlib Asset Management. Invest in more global opportunities through their partnership with JP Morgan Asset Management. Morning headlines: Moneyweb in search of deep value on the JSE, applying 4 filters results in a defendable list worth looking into. And then Bloomberg, Trump says Iran talks to begin Monday, that's today, after scrapping weekend attacks. Morning markets, yes, was green on Friday. S&P up 0.7, Nasdaq up 0.6%. East is mostly green. Sydney's up 0.6%. Tokyo's down just over 2%. Hong Kong a couple of points, 0.05% higher, and Tencent almost 3% higher. Commodities mostly red. Gold futures $4,104 an ounce. Brent $83.44. Platinum is the green, 1,661, and palladium 1,298. The rand is 16.48, Bitcoin 63,000, and top 40 expected open 970 points to the green, 0.9% higher.
Moneyweb Now, on the money. Also available on podcast.
Chatting now with Petri Redelinghuys, Herenya Capital Advisors. We had the AngloGold results out Friday, Petri, early morning. And the numbers were, good. We expected, right? Gold is still around the $4,000. Their net cash is almost $1 billion. They've got a $2 billion share buyback, $2 billion of year-to-date free cash flow. Stock was down 4%. Petri Redelinghuys, are you liking gold stocks? Are you looking somewhere else? Because the gold stocks have taken a pounding since around, late Feb when the war started.
Yeah, good morning, Si. And as you say, yes, the gold miners are making a ton of money. And somehow the market expects more. I think there's a couple of things I want to sort of chat on. One, we kind of preferred the guys that play in the broader PGM space. So Valterra, Savannah, those kinds of guys that have some exposure to platinum and palladium, as well as gold. Some of the gold miners are attractive, even if the market is a little demanding on what their expectations are.
Yeah.
But I think gold has also largely been, by proxy, the gold miners. Because, if you want, gold might move 1%, the gold miners are the geared option to take, right? So I think the gold trade is really based on inflation expectation, right? So what we've seen in recent times is that the historic relationship between risk and gold has changed. So normally, if the world goes risk off or there's uncertain times ahead, we've seen people run to gold, right? What's been happening recently is that we think that, or let me put it this way, if the world gets risky or inflation rises, people would generally run to gold because gold is that inflation protection that we've all been using for 100 years or whatever. That relationship has sort of changed a little bit in recent years, where people run to U.S. Treasuries because the expectation is that inflation is hotter than expected. We anticipate the Fed is going to hike interest rates, and if the Fed hike interest rates, I'd rather own U.S. Treasuries and not equities.
Gotcha.
And then in that sort of mix, gold gets sold off in favor of Treasuries, right? So when inflation expectations are lower, we see treasuries being sold and equities and gold being bought, which is maybe, for the old timers in the market, that doesn't necessarily make a lot of sense, but okay, that's what's happening, right?
Yeah.
So gold is sort of the war has ended trade. So the war has ended trade would be short Brent crude oil, and long gold miners, right? So if we can believe, I think the market believes it, so whether we believe it or not is kind of irrelevant, that the war, that there finally is going to be, around 700,000 of negotiations, and there's actually a chance that this war is going to end in the next week or two, gold will run, right, on the back of that. So do gold miners still have a place in your portfolio? Absolutely. Should it be more than 10% of your total holdings? Absolutely not. But, does it still have a place there? Yes. Yes, we think so.
I get your point. So, I mean, really, this gold is in what you're saying fundamentally is that this is the, as you say, the war trade, and the war's been messy. I mean, I don't know how many times we've had peace in our time, and today again. But at some point, I suppose it does end. Yeah,
I mean, or the world kind of stops caring, right? I know it sounds terrible, but Ukraine was also going to just last a weekend, right? And it's now been years, and supply chains have adjusted, and everyone's moved on, and we're not even watching the news on that anymore, right? Yeah. So that kind of is probably another potential outcome. And there's been some investments to build a new pipeline, and it'll take a decade, but then you can almost completely bypass the Strait of Hormuz, and the world kind of adapts and carries on.
Yeah,
so that's the other outcome, right?
Yeah, it sounds callous, but I mean, Ukraine is a great example. We forget there is a war happening on the eastern side of.
It's happening right now, right?
This very moment, absolutely. We'll leave it there. That's Petri Redelinghuys, Herenya Capital Advisors. Always appreciate the early morning. And our poll today on LinkedIn. You buying gold miners, yellow metal, trading around 4,000. Remember when I chatted with the World Gold Council a couple of weeks, maybe a month or so ago, and their target for the rest of the year was 4,100, give or take. So far, they've been spot on. Have your vote, have your say, LinkedIn. The Standard Flexible Income Fund is designed for pre- and post-retirement income and capital preservation needs. Retire without regret with Standard Asset Management.
Moneyweb now, on the money.
Chatting now with Thethe Mokele. She is a managing senior associate at Pinsent Masons. Thethe, appreciate the early morning time. Research on the construction sector within South Africa showing that from 2008 to 2025, as a slice of GDP, gone from 4.2% to 2.3%. That is a significant shrinking of an important sector in our economy, not just in terms of obviously building infrastructure, but in terms of employment.
Good morning, Simon, and thanks for having me. Definitely, a sobering statistic. But, it's been interesting to see how the industry has adjusted in restructuring overall. So these stats, while important, are reflective, obviously, not just of the construction sector, but the economy generally. So obviously, in times of slowed economic growth, you kind of expect a statistic like this. But like I said, the positive has been the restructuring, how these small to medium enterprises have basically come in and almost filled that gap that was historically filled by the super construction companies on these large mega projects. The small to medium enterprises have found a shoe in, and they're really, they're making inroads, they're contributing to the economy, they're employing people, which is important. So yes, definitely sobering, but on the flip side, it's almost given these smaller entities that generally wouldn't have been able to participate, a way to participate and contribute meaningfully to our economy.
That actually makes a great point, because I'm sitting here and I'm thinking of all the listed construction companies that have disappeared and gone into business rescue over the last 5 years or so. And there's been a lot of them. The rise of the small construction makes a lot of sense. My question then is, do they have the depth of skill and the like, or are they sort of doing joint ventures, perhaps locally, perhaps even with international entities to help some of that resources and some of this expertise?
So some of them have been around for a while.
Yeah.
So the experience is definitely there. It's just a matter of tapping into slightly larger projects. And then on the other side is your relatively newer small to medium enterprises. And that's where this joint venture model that you speak about then comes into play and becomes quite effective. So we see it a lot with local to local joint venture models, and we also see it a lot with international, sometimes Chinese entity, local joint ventures. And what that allows both parties to do is to leverage off each other. So you've got the small and medium enterprises who are on the ground. They can provide the local labor, the resources. They're closer to community issues. They're closer to the community and can get that buy-in from the community. And then the larger entities bring the money muscle. They bring more expertise, more advanced technology. And that allows that skill sharing and transfer so that even those smaller entities are then left with something that they can then use going forward in other projects and hopefully bigger projects going forward.
That was exactly going to be my next point. I mean, we actually get a benefit from it. And I'm always reminded, every large company was once a small company and the small construction companies can grow. And we get that transfer of skills, of knowledge, which we then have as a country, as a small construction sector.
That's exactly it. So, it's a win-win for both. It's
hugely important.
A win-win for both sides.
An important part here, of course, is government as a sort of an important leg in terms of contract, in terms of funding, in terms of helping drive the sector as well. Are they playing their part? Are we seeing activity coming from government into the sector?
We are seeing quite a lot of activity in the government sector, just trying to source that funding. But I think it would be a huge burden for them to carry on their own. So what I think they need to focus on, in addition to trying to almost front load the initial stages of the projects, de-risk those initial phases, to make sure that the projects get running, get going. There aren't unnecessary bottlenecks, red tape. You have the necessary regulatory frameworks that facilitate whatever permits, licenses, etc. are required. From a contracting side, you ensure that as much as you can, there's almost like a ring fencing of funds, because that's another stumbling block for some of these smaller, more inexperienced contractors. Once that money hits, it goes elsewhere and not necessarily to the project. So if you can de-risk that initial stage with the initial government involvement and funding, make sure the regulatory frameworks are in place, I think then you start winning more private sector investor confidence. And they then, have the confidence to then come in off the back end and fund and hopefully see the projects to completion. So I think it would be a big task for government alone, but if they can get that initial stage right, then you're more likely to get more buy-in from the private sector.
Yeah, I like that. I mean, government almost as a leg up in a sense, and a leg up in a positive sense rather than a negative. We'll leave it there. That's Thethe Mokele, Managing Senior Associate at Pinsent. Mansons, appreciate the early morning time. Let your money benefit from experience with Stanlib Asset Management. Find out about Stanlib Global Select Fund, which follows an investment discipline that has delivered results for 3 decades.
Moneyweb now on the money.
Chatting now with Shaun Meintjes, financial advisor and franchise principal at Consult by Momentum. Shaun, appreciate the early morning. A great article recently out from yourself that I had never thought of, but the risks of children inheriting wealth without financial guidance. It's one thing to have, over a lifetime, created a family wealth and to leave some of it to your heirs, to your children. Great, but they've got to be prepared by, I imagine, both the parents, but I imagine it's also a role of a financial advisor for that inheritance that's suddenly going to arrive one day. If it does just arrive out of the blue, things can go horribly wrong with large amounts of money.
That's 100% correct, Simon. So I think as a financial advisor, we've got a responsibility, to build that relationship with the next generation before the wealth transfers. We should explain the estate, trust each person's responsibility so that children knows, what to expect, so that the day that their family member passes away, they can focus on the emotional side and they don't have to suddenly stress and worry about the financial side. And then also possibly, wasting money that they, that could have changed their lives, right? At that point, they didn't work for that money. And for that reason, they're not always in a position to make the proper financial decisions. So we have to step in and, assist as far as we can.
And that then means, I mean, and again, I mean, this is to a large degree it's parents, but I think you're right. It's financial advisors sort of assisting as well. One of the concerns, I imagine, that often money's probably a bit of a, I mean, I don't know if it's a family secret, but it might not, it's one of the things we're not supposed to discuss around the dinner table. Actually, we should be discussing it around the dinner table.
Yes, that's the exact spot that is a good place to discuss it, because silence creates confusion, anxiety, poor decisions. And children should understand that wealth is a responsibility. It's not just a reward one day that my parents are passing away. So it's important to have those discussions and not just keep silent about it. And also keep in mind that you have to have age-appropriate conversations. There is a point in time where a certain conversation is good, and certain conversations are not. They're not yet ready to have them yet.
I take your point on that, absolutely. It needs to be the right kid at the right time. But I suppose it is things, it's explaining, for example, I mean, it's not just there's money and this is how much it is. It's also, how's the estate planned? What about trusts? What about structures? What about, and all of those sort of things. A, so there's an understanding, but also B, because so there can be a continuation of the wealth. And to your earlier point, it doesn't all get spent.
Yeah, exactly that. And I see that too many times where children have no idea, they the day their parents pass away, they suddenly see, oh, we actually did have money, but their parents didn't live like that. And there's a reason you can't live flashy like that, You have to worry about the day of tomorrow. You can't just spend. And for a child, a certain amount can seem overwhelming, They suddenly have the best friends pulling in and family that wants to have business ideas and loans, and suddenly you're the best friend, and it's quite concerning.
I've made the assumption that this is a conversation, within the family, 100%, but I've also made the assumption that this is there's a role for financial advisors here. I mean, is that fair? I mean, is this something which you are engaging in and assisting? I mean, the financial advisor perhaps is the continuity between the generations.
Yes, this is something that we have to look at. Like I said, we as advisors have a responsibility to do that. Yes, the parents ultimately has the ultimate responsibility, but they don't think of things like this. It's an emotional discussion. It's not fun to tell kids that, listen, if I pass away X, Y, Z, so we have to engage those discussions. Yes, client A can maybe say, I don't want to have those discussions, and then it's their decision.
Sure.
So, but we have that responsibility, Simon.
We'll leave it there. Shaun Meintjes, financial advisor and franchise principal consult by Momentum. Appreciate the early morning time. That's it for today. On Friday, we were chatting with Ilana Nell, she from 91. We were talking foreign trusts, when you might need one, what purpose they serve, how much money you need to have a foreign trust. We asked you if you were considering one. Most of you said, nah, you're not rich enough. Fair shout. Around 10% said yes, it's working great. And a few of you said that you certainly are considering one in time. Have your vote, have your say, LinkedIn. This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions. We're live every weekday morning, the Moneyweb website and the app, 6:30 a.m. podcast just after 7. Thanks to my team, Eddie Nobokhle and Nicole Sabu, to you for listening, my guests for their time. My name is Simon Brown. This is Moneyweb Now. We'll chat again tomorrow, diversification and uncertainty.
You've been listening to another Moneyweb Now podcast, posted every weekday at 7 a.m. on moneyweb.co.za. Moneyweb Now, on the money.